Hello, and welcome to my Dividend Portfolio Reveal. So in this reveal, I wanted to go over all the stocks I own in my dividend portfolio and what I like about them, and sort of give a little bit of an overview on each one. And I have these sorted by the worst performing to the best performing in terms of dollar value. There is some that have done well in terms of percentage, but not as well in terms of actual dollar value, but we have them sorted by dollar value. So the first one is Hershey. It's not showing up, but I have a loss on Hershey. I think it's probably around maybe 5 to 10% loss. And this is one where I think it's a very reliable, strong company with great financials, and I think it's not going to see any crazy growth, but I think it's going to grow well and just chug along with the rest of the market. And I think it's just a really well diversified, established business that will continue to pay dividends and be important in the future. And Hershey's also a stock that has traded down heavily, which is the main reason why I'm down on it. It's been kind of just trading down in a straight line for the past couple months. And I really think it's attractive at this price, and the PE ratio is getting really low, and I've been buying it pretty heavily, and that's why it has a pretty high current value in my portfolio, because I prioritize buying it because of the valuation. I think it's a great deal right now, and even though it's lost me money, I think that it will be one of my best performers in the future, and I'm really happy with and excited about Hershey because I think it's a really solid company. Next we have NVO, or Novo Nordisk, which is a pharmaceutical company and also a biotech company. I really like biotech, and I have a lot of exposure to biotech in this portfolio. This portfolio also is kind of like it doesn't have very much tech companies. I try to stay away from tech companies. There is maybe one, maybe two tech companies, but for the most part, it's mainly focused around non-tech companies. And I think Novo Nordisk is a really solid pharmaceutical biotech company, and they're the makers of Ozempic. And this one was actually trading up a ton for me, but recently it's kind of pulled back, and I think it's gone back to more reasonable prices. I think it's a really solid company, and it pays a dividend, and they just have amazing financials. The valuation is high. It does kind of trade at a premium because of how just reliable and great it is, but I think it's still worth owning. I kind of would compare it to something like Costco, a very solid, just crazy good company that just continues to grow and has really good growth alongside just really solid financials. And I think it's just an amazing company that I really enjoy owning, and that is why it's in the portfolio. And then next we have ICE, or Intercontinental Exchange. This is kind of like an exchange similar to the New York Stock Exchange, and it deals with future contracts, and it also trades the energy market and equities and stuff like that. It's kind of one of my financial companies kind of in the portfolio, because I wanted some exposure to financial, and this is a really solid one. I think that, and it also pays a nice dividend, and it's one of the smaller positions, but I'm still adding to it. I'm actually hoping it goes on a bit of a dip so I can add more, because it's been trading up recently. But I think it's a really amazing company and a great dividend payer, and if you like dividend companies, I think all of these are good choices. However, not all of these companies are dividend companies. I tried to buy mostly dividend companies, but some of them, like the next one, Regeneron, is not a dividend company. But it's another biotech company that just amazes me with how like steady and upward its financials have gone, and the revenue as well as the free cash flow are just always going up, and it is super solid. I can't find any faults with it, and that's why it's in the portfolio. And it also trades at a really nice PE ratio. It's kind of like NVO, but it actually has like the lower valuation, and it's just a really solid biotech company. And if you are bullish on biotech and like pharmaceutical companies, I would recommend Regeneron. I think it's a really good pick, and that's why it's in the portfolio. That's why I own it here. It's traded up a little bit, but pretty flat since when I bought it, and I think it's a good enough time as any to enter the position. Next we have Rockwell Automation. This is an industrial company. I have a hard time like finding good industrial companies. So this is one of the few industrial companies I was able to actually find where I'm like actually bullish on, and I think it's just a really solid company. So I have this in the portfolio, one, because I think it's an amazing company, and also the other reason is because I wanted exposure into industrials. And this is my choice, Rockwell Automation. I think it's probably one of the best industrial companies I could find, at least. And I have been doing pretty well on it. It's up a little bit, just like Regeneron, and I really like this position. It's just an amazing company, and I want to continue dollar cost averaging into it and holding it in the future. Next we have Carrier Global Corporation, and this is an HVAC company, or like an AC company kind of thing, where they install like cooling units in houses and stuff like that. And this is a more risky position compared to a lot of the other ones because it's a smaller company. I mean, it's still pretty big, but they're not like they're pretty new. Like, it's only been like a listed stock for about like 3 years, so not as much data to work with, and not as much like in terms of like financial data to look at. So I classify it as a more risky dividend play, but it has amazing growth, and I really like sort of the HVAC market because I'm bullish on it, because stuff like global warming and things are getting hotter, and everyone is constantly going to probably be needing more cooling and HVAC, and I think that I'm bullish on that sector because of that, and that's why I really like CAR and why it's a pretty big holding in my portfolio, because of that, because I'm bullish on the sector, and also because I think it's a really solid company, even if it is a newer sort of listed company, and it's a little bit more risky. I think it's worth it. Next, we have one of the rare tech companies in this portfolio. I tried to stay away from them, but I am very much a tech bull, so this one is kind of like my cheat company. It's a tech company. It's a semiconductor company, but I don't know. It's not like a traditional sort of like Google or Microsoft sort of style company where it's like software. It's more semiconductors, so I give it a pass. And this is a slightly smaller position that has done really well, 18.66%. I think in this company and ASML are very similar. Like, both of them are leaders in their semiconductor fields. I like Lam Research slightly more because it's a US company, and if I find two identical sort of looking companies, that's how I kind of feel with Lam and ASML. Both great financials, great growth. They're really similar looking companies. I think the main difference is Lamb has a slightly lower PE ratio than ASML, but ASML is like a slightly bigger company, I think, in terms of market share. I think those are the main differences I saw, but very similar. But the main reason that I chose Lamb is because, unlike ASML, it's a US company, so I just prefer to have a US company. I think the US market is stronger than the rest of the world, so I think that I'd prefer to have companies that are in that market, that are in the US. So, great company, it pays a dividend, and I can't wait to see where this one goes in the future because I think it will very much, it has a high growth potential along with the dividend, which is a fun sort of company to watch. Next, we have, of course, Costco. I mean, it's hard to make a dividend portfolio without having Costco in there. It's just one of the best companies in the world, and it has high growth alongside a dividend, similarly to Lamb, which is just an amazing combination because your dividends just get compounded, and then the high growth and share price appreciation increases the value those dividends are when in the future. And Costco, just amazing business model. I'm not really bullish on retail, but I love the subscription service, and I love the style of Costco and how they've sort of revolutionized a lot of what retail is. And even though I'm not bullish on retail that much, I have to own Costco. It's just a must in the portfolio. Next, we have Vertex, which is like Regeneron and also kind of similar to NVO. It's a pharmaceutical and biotech company. I want to have a lot of biotech in this company because I'm bullish on biotech, and this is my third biotech company in here, and it has done really well. It's actually been doing pretty well recently. It also does not pay a dividend, unfortunately, so it's another one of those companies. I think it's one of the Vertex and Regeneron are the two in the portfolio that don't have a dividend, but they're just such amazing companies. Like, if you look at the financials, everything is great, and it trades at a pretty reasonable valuation like Regeneron does, and I just love it as a company. Right now it's traded up a little bit, so I don't think I'd add as much to it in the immediate future, but if it trades down, I'd be looking to add more. So I really like this company. And next we have Target. Target is another retail. I know I said I'm not as bullish on retail, but Target, I think, is, if you have Costco as like the best retailer, Target for me is the second best retailer, and they were at an amazing valuation. That is pretty much what it came down to. I think if Target hadn't traded down 50%, I would have only owned Costco in this portfolio, but Target was just at too attractive an evaluation for me to ignore, and I think it's the second best retailer. I mean, a lot of people would say Walmart is, but I think Target, I personally just like Target more than Walmart, and I think it's crazy that Walmart trades at like double the PE ratio of Target. I think Target deserves to be similar PE to a company like Walmart, and I think that they are just a better retailer. Their financials are really good, and I think that they are recovering from sort of the temporary headwinds they faced. And I've done amazingly on Target because, well, the recent earnings that Target had were really solid, and that brought up the shares a lot. So this is one of my few like recovery sort of plays. I don't really like doing recovery plays, but when the opportunity arises and there's a really good company, I will sometimes buy into recovery plays, and that's the case with Target. It was an amazing valuation and a company that I don't think is as good as Costco, but it's really solid, and I think that it will recover, and I will be really happy with it. I'm not currently adding to it though because it traded up so much. If it were to go down to around the 110s where it was before, I would add to it, but not at 138. I'm just watching it grow and collecting dividends. Next we have, speaking of recovery plays, next we have Nike. This is another one that traded down a ton, and similarly to Target, traded down like 50-60%. And I thought it was an amazing price point to start entering at. It got down to a really low PE. It's still pretty low. Like, it hasn't recovered too much, but similarly to Target, it has been recovering. That's why I have substantial gains on both these stocks, because I was buying at the really low prices, and right now they've traded back, and I'm kind of just watching them grow. I think I've added enough to them. I might continue to dollar cost average, but I'm not aggressively buying into either Target or Nike. I'm kind of just sitting back and letting the dividends reinvest and watching my companies grow that I bought into at really low valuations. So I'm happy with these two. And next we have SCHD. This is a big one in the portfolio, my biggest holding by far, and this is one to keep the portfolio just stable and safe. It kind of gives me a lot of diversification, and it holds a lot of the really good dividend companies. And I know it might not be like the best in terms of like you're pretty diversified, so you're not going to see crazy growth. It's really just a stable, it doesn't move very much in terms of like price, but it will increase. It's going to go up over time, just like the rest of the market. And I think it just adds a lot of stability and safety to the portfolio. Although I kind of just have this as like a starter position when I first started the portfolio, because I didn't really know what I wanted to buy at first. And I thought, I'll just put it all in SCHD and then figure things out later. And now that I have companies that I really like, I'm considering like selling or trimming SCHG and putting it into these other companies. But I think for now, I'm just willing to hold on to it, and we'll see. And maybe if it trades up a lot and in like comparison to the rest of these companies, and like another company I really like on this list falls a ton, I might consider trimming and adding to that company. But right now I think it's not really outperforming any of my companies. It's kind of been in a little bit of a slump, but I think it's still a solid one, and I like holding on to it. And next we have BlackRock, which is another one of my financial companies. I think this is the best performer, 21%, $278. It is another dividend company that is just a very solid dividend payer, and I think that it is kind of positioned to be really good in like the future, and it has just a huge market cap, huge share of the financial sector that it's in. This is just a company that I think is worth looking into, at least, even if you don't want to buy it. I think that it is a great company, and it trades at a solid and just a fair valuation. And I think that it is a very good company, and that's why I have it in the portfolio. So that is my $20,000 dividend portfolio. So far, it's been around for about, maybe 7-8 months now. It's up 1,700 almost, and about 10%. And I hope to do updates in the future and go over my portfolio as well as my gains and what is happening and any stocks I buy or sell or whatever happens. So thank you for watching. I'll see you next time.